Hey everybody, welcome to this channel. Today we want to talk about how to pay off a mortgage faster. Make sure to watch until the end, because it's one of the most amazing hacks you have ever seen. Please, subscribe and turn on notifications so you don't miss more videos and much more. Paying off your mortgage early helps you achieve financial freedom and gives you the feeling of security. Your home is the most expensive purchase you will make in your lifetime. It's no surprise that you fantasize about the day when your monthly mortgage payment would be gone for good. The thought of when are you going to ever be able to pay your mortgage is no doubt extremely stressful. Subscribe to the channel to see our latest content. Without further ado, let's begin the video. Paying off a mortgage early can save you tens of thousands of dollars in interest because mortgages are often substantial debts that last for many years. Not to mention the relief of not having to worry about a monthly mortgage payment. When you send your monthly check to your mortgage lender, the payment is divided into principal and interest. Early in the loan, a considerable amount of the payment is dedicated to interest. As time passes, a larger portion of the payment is used for principal reduction. This is known as amortization, and it helps the lender to recoup a bigger amount of their investment within the first few years of repayment. Simply because you have the ability to pay off your mortgage early does not mean you should. No doubt, getting rid of a major financial burden like a mortgage would be fantastic. But, if you truly want to know if it's a wise option, you need to look at the numbers. Paying off your mortgage early has benefits and drawbacks. Your total financial status will determine whether the advantages outweigh the disadvantages. By shortening the amount of time you spend making mortgage payments, you reduce the amount of interest you pay throughout the life of the loan. Paying off a mortgage early might result in significant savings, depending on the loan amount, interest rate, and initial duration. The average mortgage term is from 15 to 30 years. That is a lengthy period of time to be stuck with debt payments. Paying off your mortgage early allows you to save money for more exciting activities later in life, such as travel. Paying higher interest debt. If you have a credit card or student loan debt, directing your excess cash toward paying off your mortgage early can cost you in the long term. Because the interest rates on these other sorts of debt are likely to be greater. You should also have a substantial emergency reserve to handle unforeseen bills, otherwise, you may be compelled to incur high-interest debt. If you can invest your money for returns that are much higher than your mortgage rate, you'd be better off doing so than foregoing compounding gains to pay off your mortgage sooner. For example, if your mortgage rate is 3.5% and your portfolio earns an average of 6% per year, spending extra funds to pay off the loan early will cost you money. Paying extra than the monthly amount due is one of the most effective ways to pay off your mortgage faster. That may sound simple, but you may be surprised at how far a little extra cash may go. Assume you have a $250,000 30-year fixed-rate mortgage with a 5% annual percentage rate and 25 years remaining on the loan. That works out to $1,342.05 each month. Assume you add an extra $20 to each payment. You'd cut the payments period in half and save $5,722 in interest. Make use of a mortgage calculator. Remember that you can't use all your savings to pay the mortgage at once because that rash step will put you in immense financial danger. You may lose everything else in the processing of paying the mortgage faster. A slow mortgage payment is better than paying a lot of amounts together. Just try to move slowly and keep a watch on your financial condition when paying the mortgage. Maybe you can't come up with the extra money to make extra payments each month. That's fine. A few well-timed extra payments throughout the year can be even more effective. Perhaps you receive an annual bonus from work or a tax refund each April. If you decide to make extra payments on your mortgage, make sure to verify with your lender to ensure that the extra cash will be applied to the loan principal. You need to make sure how much you would like to pay on monthly basis, but if you won't, your lender would do the whole calculation, and that may be painful. Because he may write down a lot of money that you would be required to pay each month. So, it's better to take things into your hands. Mortgage borrowers frequently choose a longer repayment term, typically 30 years, in order to keep monthly payments low. However, as time passes, your income may rise or your lifestyle may change to free up additional cash flow. If this is the case, you may be able to refinance your loan to a shorter term. Monthly payments are expected to rise and the repayment period is compressed into a shorter time frame. However, this is an excellent strategy to pay off your mortgage much sooner and save a lot of money on interest, especially if you qualify for a reduced interest rate. You've probably heard of refinancing, but you may not have heard of mortgage recasting. When you recast, you make one substantial lump sum payment toward your principal balance. Recasting usually necessitates a minimum investment of $5,000. The lender then remortgages the loan to reflect the new balance. Recasting a loan does a few things. For one thing, your monthly payment will be reduced. You'll also save money on interest during the life of the loan. And if you use those savings toward higher monthly payments, you'll be able to pay off the mortgage sooner. Splitting your monthly payment into 2 smaller payments and paying bi-weekly is one approach to pay off your mortgage early without having to make any extra payments. A monthly payment, or 12 installments per year, is required for the majority of mortgages. Switching to bi-weekly payments results in 26 payments per year, effectively one more payment. This not only speeds up the repayment of your loan but also saves you money on interest over the life of the loan. Although not all lenders accept bi-weekly payments, many do. If you want to switch to this payment method, contact your lender and double-check that there is no fee for doing so. Assume you did pay off your mortgage early, which of course is going to be a great thing, and applause for that. What are the last measures to officially get rid of the loan? You'll receive multiple mortgage release documentation proving that your loan has been paid off and that the bank no longer has a lien on your home. This will almost certainly include a statement indicating that your mortgage has been paid in full, as well as a canceled promissory note. It is also typical for the lender to notify the city or county recorder that you are the legal owner of the property. However, in rare circumstances, you may be required to handle this yourself. If there are any funds remaining in your account, your lender will return them to you, and you will be on your own for future property tax and homeowners insurance payments. It's not an all-or-nothing proposition to pay off your mortgage before the conclusion of your term. You can combine these tactics to pay off your mortgage faster, or you can tailor them to your own budget and lifestyle. One thing to bear in mind as you consider these options is that, with mortgage interest rates at historic lows, you could be better off putting the additional cash you'd need to pay down your mortgage toward another sort of investing. Then try this method. If your mortgage interest rate is 3.2% but investing will provide you a 5% return, you might prefer to go with the investment choice. That's a wrap for today. Don't forget to smash the thumbs up, share, and subscribe to the channel, and comment down below your suggestions. See you at the next video.